Stock market update, everyone. I do not do this for my health. I do it for your wealth. So let us focus and concentrate on that. Expensive. Everything is expensive. If the market wanted an excuse to fall, it would already have it. It's had it for 12 months. It's not using it. It's dithering. And so let's look at what's actually going to rise in just a second. These are PE ratios. That means you are paying $109 for every dollar the business of Amazon makes in profits. Bit pricey, that is, because as you can see, there are businesses which are a lot cheaper, such as JP Morgan. You'd only be paying $9. Of the two companies, which would you want to buy? Probably Amazon, which tells you that price earnings ratios are not the only thing to look at. So let's have a more detailed look at things. By the way, as you know, I do a lot more analysis than I'm just showing you. I will look at, with the stocks that I'm going to come up with, value, growth, income, cash flow, momentum, Sortino Alpha, a particularly important price earnings growth, volatility. So I just wanted you to know there's a lot more depth that goes into all of this than that I'm just giving in these few minutes. Microsoft and everything else shot up this past week. Actually, all the technology stocks, pretty much everything with the exception of utilities. Energy did, but then it's undervalued, as I already said. But then the things which were already expensive that we just said, like all of these, they all went up. So what the hell's that about? Well, it tells us one important thing. Valuation is not the only thing that moves markets, and there are more ways to value things than PE ratios. For instance, this price earnings growth. In other words, the share price compared to the growth in profits a business might make. So you might be willing to pay $109 for Amazon making $1 in profit a year if you know its growth, or you forecast its growth in profits is going to be phenomenal. However, we don't know that, because under 1, if the ratio is under 1, it means it's undervalued. And there's very few things which are. For instance, yes, GE is. So 1 or 2 banks, hardly any, actually. So let's just have a look at where we are in the markets and some of the bellwether stocks. NASDAQ up 41% year to date. I have clients on the Great Investments Program who have doubled their pension because they followed what we said since January. However, those who joined later, don't worry. You still have a lot of petrol in the tank and a lot of gains to come, but we're going to have to be a bit more selective in our picks, because we're not going to get another 41% in the next 6 months, I don't think. The S&P 500 is up 17%. The reason people in Britain are poor in their pensions is because it's only up 5%. However, luckily for them, Brits can buy American companies. And for those saying currency risk, did you 41%? Stop panicking at currency risk, for God's sake. And you're not going to be trading in and out every day. You're holding these, presumably, for a long period of time to get your returns. S&P 500, where are we? Well, we had that bounce up from this lovely support line, and then we've had a bit more of a flat week. Okay, what does it mean? Well, this monthly MACD, the blue dotted line, which is longer term momentum, should start rising. However, worrying, the weekly has fallen below its support, and that can, below its yellow signal line, which is its moving average. So that does concern me somewhat, and September tends not to be a positive month for the S&P. So do not be surprised if this drops again, and probably drops below that support this month slightly. Doesn't mean that it's get the Andrex time or anything like that. It just means you should not be surprised that even in an upward market, you will get a fall potentially this month. As for the FTSE 100, I think that's going to capitulate at some point, because the monthly MACD is here. So Alpesh has said it. Just keep it in mind. Doesn't mean it's always going to happen. It's not guaranteed. Look at this. Thought it would happen there, and in fact it did a V shape, which is a little bit unusual, but I think more downside likely than upside. How about Apple? I love my apples. How about Apple? Well, if you put a gun to my head, and some of you may want to for fun, if you put a gun to my head, I'd buy it now. However, given the S&P in September tends not to be such a great month, if somebody was fresh into Apple, I would probably say dollar cost average, maybe buy a bit this month, a bit next month, and a bit the month after. If you are risk averse, you might even just wait. Personally, gun to head, I would buy that today still, even though I know this is not as cheap as it was when we repicked it in January of this year, of course, when the MACD was all the way down here with this growth. This is probably still going to go there. So I think where this return that you've got here, we should see, hopefully, in the next 18 months, replicated, okay? And the analysts, whilst they think on average it's only got that much of a return, the analyst who thinks it's got the highest return thinks it'll go to 240, and it's currently 189. Okay, what about Alphabet? Well, again, if you put a gun to my head, same strategy as with Apple. Beware, September tends not to be the greatest of months, but look, we can see that going upwards. And if you want to know, well, what might the week ahead look like, Alpesh? And you shouldn't trade your investments. If you wanted a week ahead, you would look at the weekly and monthly stochastics, because they're more sensitive to those kinds of things. There they are, weekly and monthly, rather than the weekly and monthly MACD, which are less sensitive but more important. So where do we have more upside? Alphabet, sure. Microsoft, same strategy as Apple as well. Well, with this, I probably wouldn't even dollar cost average. I'd just get in, okay, even today. And if I had some spare cash and I couldn't think of anything else to do with it, I personally would put it into Microsoft. This is not financial advice, of course, because I don't know your personal circumstances. Only you know your personal circumstances. Okay, Amazon, gun to head time. Well, cost average, because look, it hardly ever goes up in September. So probably dollar cost average. Risk averse, probably still wait a bit until October. Risk loving, buy it all today. Okay, and that's the projections that I put in previously. And remember, I'm not just giving this off the charts. As I said earlier, we actually do this analysis on all of these stocks as well, and make sure we get complete greens on the companies that I am discussing, or they're a special situation, or they're one of my quality 5. So one way or another, now look at Disney. Okay, what a letdown. Okay, which just shows I can't guarantee which way the markets would go. I actually thought it was going to do this. Look at that. Can't guarantee it. Multi-year lows. Now, all of these banks, Citigroup, Wells Fargo, Morgan Stanley, have all said buy, 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 buy. It hardly ever goes up in September or October, and it's falling. So, no. Now, somebody is going to say, well, it's a multi-year lows. I can see it to go from 81. But if it goes back to where it's been in the past, I'm going to double my money if it gets to 160. You are indeed going to get 100% return. But let's just wait a bit longer, shall we? And certainly the analysts on average, if you listen to them, think you're going to get at least a 34% return. But let's just wait a bit longer, shall we? And all I hear about is how Oppenheimer was killed by Barbie. I'm not quite sure how she murdered the scientist, but anyway, this is where we are, well, in the movies. There we go. Now that's overbought. That's worrying. So if you're risk averse, you say to yourself, I'll sell everything, or I'll sell between 10 to 100%, depending on how much it falls from these highs. So if it falls 10%, I'll sell 10%, or 20%, or 30%, depending on your risk appetite. What does the future hold? Well, I'll have to tell you in hindsight in 12 months, I'm afraid. But for the moment, all I can tell you is, if you're risk loving, you still hold on and keep an eye on it. Certainly all of these ones, they would not dare say sell on Nvidia. Nobody's got the balls to do that. Nobody wants to get sacked at the moment, okay? And the analysts all on average are over-optimistic. Are they over-optimistic? No, I think it's got more upside. Again, gun to head time. If you're risk-loving, you'd buy it now. If you're risk-averse, you'd dollar-cost average. And if you're risk-neutral, dollar-cost average. If you're risk-averse, of course, you wouldn't even be in the markets, would you, if you're risk-averse? Tesla, similar story to the others. Upward support. You know how to read these by now. It's going, so it's taking time. It's a bit slow. And these next 2 months, September and October, tend not to be great for it. So I wouldn't expect any great fireworks from that. And analysts seem to think it's fairly valued anyway. Now, these are bellwethers. I'm giving you these bellwethers, okay? Tesla, we picked in January. We've done well out of. Meta, picked in January, and doing well out of as well. And you can see there's some upward momentum up here. But what happens when the monthly MACD is rising, but the weekly, like here, is falling? Now, usually the monthly wins, and so any dip is short-lived and you start getting the move back up. However, sometimes it can happen that the weekly wins and you get this. You got to take a view, and the view that I take is not just based on what the analysts say. The view that I take is that this is more likely, and I'm going to put that at 66%. This far less likely, I'm going to put that only at 33%. I also look at the fact that Apple, Microsoft, and the others can't rise and this fall. That tends not to happen. They tend to be quite correlated, and therefore, given the others look pretty good, I see this as being held up. So I don't see falls in Meta being as sharp as they were, certainly last year. So the issue, well, how sharp do you see them? Well, I've drawn it here, and that's the worst case scenario for me, and determine your risk based on that. Today, you might say gun to head. I'll get in Alpesh, I'm risk loving. Or you might say, I'll dollar cost average. I'll buy a third today, a third in a month, and a third a month after that. Service now, that's the direction. I was a bit disappointed when this happened, but it's already made up for it, and we're back into positive territory. Thank you very much. And it looks like, you can see what happens when the weekly MACD falls, but the monthly wins. You get this. And that looks like it's going to happen. And by the way, September and October tend to be strong for it in any event. So this is one which I own and continue holding and like, and looks all good. Cisco, similarly, own, like, and we see that direction. This is probably even better. I should probably look at some out-of-the-money options for January or February in this, I think, and see if we can get 100% return on those. But Cisco, continue liking. Okay. This is the public market update. If you are part of my Great Investments program, you know you can get the more detailed one on Fridays, which is on the private Telegram channel. Everybody else, please have a look at the campaign for $1 million and have a look at my YouTube channel and alpeshpatel.com/links as well. Hope you enjoyed that. Thank you very much. I'm Alpesh Patel. Like I said, I don't do this for my health. I do it for your wealth. That might become a catchphrase going forward.